Everyone, welcome back to another live trading session. Just a quick sound check and then we can get started. Good day, good evening, good morning, wherever you're from. I hope you guys are having a great day. It's been a fantastic week this week. For trading, that is. Alright, just a quick sound check and then we can get started. Okay, audio seems to be good on my side. We'll get started with a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Alright, as per usual, any requests for anything that you guys want me to have a look at, just let me know. I'll go through a few stuff. We'll talk about the majors. I do want to talk about the yen crosses a lot more today, because that's where we're looking at the big moves for this week. Alright, but first let's take a look at the dollar index here. Do note with the dollar index there's actually a little bit of a gap today with the dollar index. It does open up with a gap just slightly above 102.75. So right now in terms of support for the dollar index, it is still going to be at 102. Technically we are still looking at a higher low on the dollar index despite whatever it is doing right now. It is below the Ichimoku cloud slightly. But again, for as long as 102 holds, we are still going to be looking at a potential recovery on the US dollar, but that's likely not going to be the case for tonight. We might actually see this happen maybe this week or next week, hopefully. But again, 102 level is going to be the key level to watch out for if you are keeping an eye out on the dollar index. Make sure that 102 is in your radar. If the dollar index falls below 102, then we are going to be looking at a potential continuation to the upside for the Euro USD, the Pound USD, and etc. Except for the Dollar Japanese Yen. The Dollar Japanese Yen, it's in a unique situation, and we need to talk about the Japanese Yen crosses today. All right. All right, let's cover some of the stuff first. We will start with the Aussie USD. Aussie USD here, we have a bearish flag pattern on the daily time frame. Just to recap, this is in the current formation pretty much throughout the whole month of March. Let me just see. Since mid-March it started doing that, so we are pretty much in the last week of March. We are wrapping up the month of March, right? One thing to note here for the Aussie USD, this one might actually be a potential for a sell if it does close below 66.50. So we want to focus on 66.50. This is on the daily chart. We'll cover the daily chart first, just to give you guys an outlook. It's a little bit of a guidance on the overall underlying trend for the Aussie USD. The overall trend remains to the downside. If we take a look at the momentum here, this is currently taking a little bit of a pause. The slow stochastics and the fast stochastics is actually pretty much flat at 54. Not that much of a difference. We've got the slow at 54.38, the fast at 54.81. So we'll consider this pretty much at about 54.55 on the Aussie USD. So we don't actually have any momentum on the Aussie USD. The Aussie USD, technically, it's flat right now. We still have that 67 cents as a key resistance for the Aussie USD. What we're keeping an eye out for the Aussie USD is actually a potential daily close below 66.50. If there is a daily close below 66.50, then we might see further push lower for the Aussie USD, potentially towards 65 cents. That's like roughly going to be where the 127.2% of the current run on the Fibonacci for the Aussie USD. If you guys want to know what that is actually from the 20th of December to the 2nd of February. It's pretty much a 2 months rally. We are basically basing our calculation on that 2 months rally in December. All right, so Aussie USD, pretty clear on the Aussie USD. Euro USD is up next. This one here, just we're not gonna be able to look at it on the daily time frame, but we'll actually look at it on the hourly time frame. It might become a little bit more apparent. Just to give you an underlying thoughts on the Euro USD, we basically transitioned back above the Ichimoku cloud. and basically last Friday it bounces off 75 cents, and that's where the Ichimoku cloud is located. So we are technically we went through the Ichimoku cloud, it came back to test support, and we are now currently on the potential trajectory to the upside. The daily momentum, it's rather flat, just because right now in terms of key resistance for the Euro USD, it's currently located at 1.0850 to 1.09. Now this is going to be your resistance range for the Euro USD. If you're trading the Euro USD, be a little bit more careful when it comes inside this range here. So the next 50 pips on the Euro USD is going to be critical. If it manages to push beyond 1.09, then I think that's going to be great. But we'll take a look at the Euro USD later on the early time frame. It actually just transitioned above 1.0850. We might actually have enough momentum to see this one push a little bit higher. So, but it's still going to be capped at 1.09. Okay, so that's with the Euro USD. The underlying trend has shifted again to the upside, so we're looking at a little bit of a recovery on the Euro USD. In terms of key support, we are focusing on 1.0750. In terms of immediate resistance, right now it is at 1.0850 to 1.09. So we need to clear off this area. Once we clear off 1.09, as I mentioned in the outlook this week, once we clear off 1.09, opens up a lot of opportunities to the upside. It opens up that potential move towards 1.1, 1.11, potentially up even 1.12 on the Euro USD. So there's actually a lot of potential targets, but we need to clear off the current level. We need to get past 1.09. So 1.09 is going to be the key level to watch out for. In terms of momentum, if you take a look at the daily time frame, the momentum, it's actually pretty all right. It is at about 75, so it's technically not overbought yet, so it does have that room to potentially progress and track higher on the Euro USD. Now the pound USD is also interesting, because on the pound USD, we did mention this again on the outlook. If it does break that range, the range is 1.22 and 1.23, whichever sides breaks, that's likely going to take the pound USD in a certain direction. Now this one here, it actually closes above 1.23 yesterday. So for today, it's currently at about 1.2350. What we're looking at on the pound USD is a potential return towards 1.2450. That's going to be the first stop for the pound USD. Further trajectory to the upside, if it surpasses 1.2450, it opens up 1.25 and then 1.26. But again, very similar situation with the Euro USD. Unlike what happened in February, where we have that transition to the downside, we have actually seen this recovered. We have seen market recovered. It's now above the Ichimoku cloud. So we are now looking at a potential start of a new uptrend on the pound USD, Euro USD. Okay. Now, what I'm saying with the dollar Japanese yen, this one here is in a very unique situation. Just a little bit of a disclaimer, I do have a position on the dollar Japanese yen. Basically bought it off the bounce of 130. But in terms of potential target for this one here, I'm still eyeing for 134.50 on the dollar Japanese yen. As per outlook, I gave a time window on this one. It's between 20th of March to the 31st of March. So we are within that window at this point in time. Today's the 29th, right? So we've got 2 more days before it kind of ends. Why 20th to the 31st of March? There's a little bit of a lack of resistance coming from the Ichimoku cloud, and that's currently located at 132.50. So a daily close above 132.50 will take the dollar yen higher. Now, if you're wondering what's going on, why is the Euro USD going up, the pound USD is going up, and why are we looking at the dollar yen going up as well? Now, if you don't know, the Japanese government just released a stimulus package in Japan. It cost them 2.2 trillion yen, right? And that's basically what's really pushing the Japanese yen lower. The other thing to consider is that, as you know, we just had the hearing on SVB and Signature Bank in the Senate in the US about 2 days ago. Pretty much, I think the financial system, it's pretty much okay. All right, we're not really looking at any undesirable situations. We're not really looking at a repeat of 2008. In fact, with the collapse of SVB, First Citizen? I believe it was First Citizen. They basically bought out the savings accounts and the credit loans from the FDIC, which took over SVB at a cost of $90 billion for a $110 billion asset. That's pretty much done. So what we're looking at is a current situation where, the weaker banks that kind of fail, it's being taken over by other banks with much larger assets. So we're looking at a little bit more of a merger and acquisition situation for the banking industry at this point in time, and that's obviously started with what happened with Credit Suisse and UBS. So I think it is safe. I don't think we're looking at that run towards safe haven. That was a concern that was in the outlook as well on this week. We might actually be looking at that as a potential concern, but I think by how the market is reacting right now, we're seeing yen dropping down really significantly. And with the dollar Japanese yen, you can see right now where price is currently located. It is at 132.37. It's just that extra 10, 15, 20 pips to surpass 132.50, which is the barrier for the dollar Japanese yen. And with the dollar Japanese yen, the outlook for me this one is actually simple. This is actually a very good swing trade. If you manage to get in early this week, then you might actually get a good price, about 131, potentially 130.50. But right now, if you're thinking of going long on this one here, you can wait for that break above 132.50, and you can still aim for 134.50 if you want to. That's going to be the next barrier for the dollar Japanese yen. It's going to be staggered. All right, we've got 133.50, 134.50. But what I'm eyeing for here is that if the momentum builds up, and if you take a look at the stochastics here, I don't know if I can somehow zoom through, but I want you to focus on the stochastics here. This is at 19.5. Once this comes out of it, if it goes back up above 20, which is probably sometime tomorrow, right? Once the daily close today, if it closes above 132.50, it will take the stochastics up above 20. And when that happens, we will consider the dollar Japanese yen to be oversold. And if it closes above 132.50, it will also come back above the Ishimoku cloud. So with the dollar Japanese yen, it is in a very interesting situation. It's going to be very unique. And the mindset that we need to have is that the dollar Japanese yen doesn't really represent the dollar in general. It is moving with a different mechanics. The Japanese yen crosses, I'll be honest with you, it needs to be taken a look at from a different angle. We don't really look at correlations between yen crosses and the dollar pairs. So this one here is going to be a little bit different. So with that in mind, just keep an open mind on the dollar Japanese yen. We're just really waiting for that break above 132.50. Okay. Today, Aussie CPI year-on-year dropped to 6.8%. Market expects RBA will pause the interest rate next week. But from history, every time CPI drop, next data CPI will go high. What is my opinion on this one here? With the Australian CPI numbers, we actually have a lot of numbers with the CPI numbers. In fact, it's not just today. I think about 2 weeks ago, we actually have another report on inflation for that. The RBA stance, I'll be honest with you, the RBA doesn't lead, right? The RBA follows whatever other central banks are doing. So I don't think they will start the pause if the other central banks are not pausing as of yet. What happened with the RBA pausing the other time was that with the moment they pause interest rate hike, the inflation number goes back up. But I'll be honest with you, the Australian CPI numbers, it's not really that crucial, because if we take a look at where the inflation is for Australia, it's 6.8, right? And this is without the RBA doing, significant rate hikes, unlike the US, for example. If you take a comparison with the current situation in the US, the inflation number, it's roughly about the same, right? We're looking at a number that's close to 6%. But if we take a look at what's going on with the FOMC hikes rates significantly, and that causes, obviously, that's going to be that 6 months fundamental delay that's going on right now. but we saw them going a lot harder. It really pushes inflation down, and it pushes it down from a higher number than the current state. With the Australian number, the inflation number, the drop is actually not that significant as of yet. So I don't think the RBA will actually pause. They will, RBA being RBA, a very similar stance with Bank of England. They will mention stuff like, oh yeah, you know what, this is about it, but that's unlikely going to happen. I think the RBA is still going to be set for a 25 basis points hike, but the mechanics is going to be different. It's not going to be like how rate hikes happening in ECB, Bank of England, and the FOMC, how it affects the currency market. The RBA rate hikes, if you pay closer attention, whatever they do, it actually doesn't have a long-lasting impact on the Aussie USD, because the mechanics for the Aussie USD, it's slightly different, right? If we're looking at a really hawkish RBA, if they go by 50 basis points, sure, that might actually push the Aussie dollar up maybe by 1 cent, but that's pretty much it. So it's not really in the same category as if we're looking at FOMC, ECB, and Bank of England. Hopefully that kind of clears it up a little bit. All right. The pound EU and USD has been discussed. The pound, yes, slightly. The euro, slightly, yes. Right now we're looking at the euro. We at 1.0850, 1.09. We need to clear off. We're still looking at the daily time frame. We're not really looking at the hourly time frame as of yet. So just give you a little bit of an underlying movement on where the trend is likely going to go. If you take a look at the Euro USD as well, the Tenkan Sen is pointing up. The Kijun Sen is actually really flat, just below 1.0750. So what we're looking at is actually a short-term trend moving up on the Euro USD. We have bounced off the Ichimoku cloud. For the pound USD as well, the Tenkan Sen, it's still pointing to the upside. Again, we just surpassed 1.23. Right now, we will take a look at the hourly time frame for what's likely going to happen. Should you be going long on the Euro USD and the pound USD? In my opinion, for the Euro USD and the pound USD, you might actually need to wait a little bit. The yen crosses are okay, but for the Euro USD and the pound USD, it's likely going to be a little bit unique. We'll also touch base on oil and gold while we're looking at the daily time frame, just to give you the perspective on gold at this point in time. If you take a look at this one here, there's actually a pennant in gold at this point in time. It is within a symmetrical triangle. It is within range between 1950 and 2000 level. All right, if you're not looking at the pennants, let me just kind of draw your attention to it. Right, just so you guys can see what's really going on. So it is within a pennant. This pennant is a little bit unique because if you take a look at the current price level, it's kind of in between 1950 and 2000. So even with the break of that triangle, or with the break of the pennant, we are still going to meet resistance at 2000. We're still going to find support at 1950. So I would actually kind of ignore this pennant at this point in time, because it really doesn't change the perspective that the gold is currently traded between 1950 and 2000. That's going to be the current level until we break either above 2000, which is, to me, I'll be honest with you, it is going to be unlikely. We don't have that run towards safe haven at this point in time. I think the banking stuff, I think it's pretty much all done and dusted. Might actually be eyeing for a break below 1950. Again, this one here, in terms of how thin the Ichimoku cloud is really far. It is below 1880. So I would actually be eyeing a little bit more on the potential break below 1950. Right now, in terms of potential stop losses for gold, there's also a lot of orders line up at 1950. So if 1950 is triggered, then we could actually see a quick drop to the downside for gold. It is not going to go straight down to 1900 in one day. It will potentially pause at 1940, 1920, and then 1900 for gold, right? For oil, this one here, we actually do have a trade on oil, and I would say if you guys were in on this trade for oil, I think this was actually discussed last week as well for oil. We're looking at, a little bit of a run to the upside. Right now, we are facing a little bit of a resistance. So if you do have oil long position on oil, you might want to scale out a little bit at 74 or 75, right? I would say really it doesn't matter much. Current oil price is at 74. It's just another extra dollar towards 75, where the it is slightly going to be beyond 61.8%. I would actually prefer to scale out of the oil positions, and you can start moving your stop losses if you want to about 68. You don't need to have your stop loss at 64. You can actually have your stop loss at about 68 if you are trading oil, right? So a little bit of position adjustments for oil. If you're thinking of going in long on oil at this point in time, I would probably say I'll be a little bit more cautious until we actually break above 75. Okay. So RBNZ have the same sound as RBA, right? I would say RBNZ is probably even worse, right? Not in the scale of things. I don't really pay close attention to RBNZ, Bank of Canada, RBA occasionally, but at this point in time, they're not really leading the market in terms of interest rate hikes and their decision on their monetary policies. I don't think it really matters because they are really just following what the FOMC, ECB, and Bank of England does, pretty much the big three, right? So RBNZ or RBA, obviously RBNZ doesn't really matter. And now the reason why I say it doesn't really matter, it's not this. It might matter if you are a Kiwi, right? If you live in New Zealand, it might matter to you. But on the grander scale of things, the size of the economy for New Zealand and Australia, right? In terms of their import scale or export scale, in terms of their trade relations with other countries, they are not that huge, right? The size of the economy is actually it's incomparable. I'm not being biased or anything like that, but if you take a look at developing countries in terms of size, like Turkey, Indonesia, India, they have a much bigger influence into the whole global economy than what's going on down under, right? And I'm not being biased. In fact, I'm from Australia, so I would tell you that. The RBA gets into the wording with the RBA and the RBNZ. They kind of act tough and stuff like that, but really, it doesn't have that much of a huge impact into the market. All right. Okay, so someone's spamming, but whatever. Okay, so I think we covered a lot on the daily time frame. Let's jump in on the shorter time frame. Someone asked a question on the Aussie USD. Can you go short? If you want to go short Aussie USD, you really want to wait until we break below that bearish flag that we have on the Aussie USD. This one here is a pretty clear and defined flag, and we do have that clear entry point pretty much below 66.50. If there's a daily close below 66.50, then yeah, we're looking at a potential short on the Aussie USD towards 65. Okay. Do we see bearish divergence on the EuroCAD on the daily? Let me check. See, I don't even have EuroCAD here. I need to look at where my EuroCAD is. There we go. Do we have a divergence, a bearish divergence on the EuroCAD on the daily time frame? I think we could classify this, but let me just double check with MACD and the RSI as well. Just no harm done in double checking a lot of this stuff, just in case we're not looking at anything. All right, the stochastics does do the confirm that. So sorry, we have double stochastics. I don't want stochastics. I want RSI. All right. So only stochastics is showing that divergence. The RSI doesn't show that divergence at all, and also the MACD doesn't show that divergence, because if we take a look at this, the only one that points to a potential divergence is just stochastic. So I would actually ignore this divergence. Because I'm not seeing it on the RSI and the MACD. If there's a divergence that appears in the stochastics, the RSI should reflect that, because that's the fastest one to react to price changes. So I'm not really looking at the divergence on the RSI, because if you take a look at the RSI, it still creates a higher high. So I would actually ignore this divergence on the Euro Canadian. Really can't base it just based on this one here. So the overall trend for the Euro Canadian, just to let you know, overall we still have that 1.46 as a potential support level. I don't think we're actually going to go all the way to 1.46 even on the daily scale. I think we actually might pause a little bit before 1.46. So yeah, about 61.8% is at about 1.4650. Yeah, the max is going to be about 1.46. So we're not really looking at, I mean, if you want to attempt to go short on this one here, it's going to be a lot. There's actually going to be a lot of risk depending on your stop loss, because if you are planning to trade this and you want to go short all the way to 1.4650, it's not going to be worth it. Even if you go for 1.46, risk reward ratio is nearly double the risk. To me, I don't think it's worth it. If you take a look at it on the daily time frame, you might actually get a much better entry on a smaller time frame, maybe on the hourly time frame, because on the hourly time frame you might actually be able to go in for that short, targeting 1.4650 with a little bit of a small stop loss. Or you can have it slightly above 1.48 if you want to. You can target that correction towards 1.4650 if you are thinking of going short Euro Canadian. But just a little bit of caution, because we're looking at a lot of support coming in for the euro, from the euro yen as well as the euro USD. So this one here, it might not go as well as you plan it to be, or you think it might be, because currently we do have a lot of support building up on the euro. You might actually see support coming in at 1.47, way before 1.4650 on the Euro Canadian. Okay. Any forecast for tomorrow's news? There is very much nothing for tomorrow. We've got preliminary CPI numbers, US GDP numbers. There's going to be about the same. I would focus more on Friday rather than tomorrow in terms of fundamentals. We don't really have any high impact fundamentals. We have the final GDP numbers from the US. That's likely going to remain stable at 2.7% quarterly GDP. So not really going to have a lot of impact onto the market. So yeah, EuroCAD, not looking at it. There's a bullish divergence on Brent crude oil daily. Is that right? A Brent. Let's take a look at Brent. There is no hidden bullish divergence daily. No, there isn't any hidden bullish divergence, at least not on the daily time frame on Brent. All right, let's go into the hourly time frame. Let's take a look at gold. Someone's asking if there's actually a hidden bullish divergence on gold. I wouldn't call it a hidden bullish divergence. You might actually pick it up from stochastics, but here's the thing with hidden divergences. It needs to be in a certain trend, right? So with the gold at the current situation on the hourly time frame, we are technically not in an uptrend yet for gold. So I wouldn't classify this as a hidden bullish divergence. And also, we've been monitoring the hourly time frame with the RSI. The RSI is also not picking it up. During situations like this, I would actually prefer the RSI rather than the stochastics. And also, there's no uptrend, so we don't really classify this as a hidden bullish divergence. You can refer back to the divergence webinars if you want to, But for a hidden bullish divergence or a hidden bearish divergence to happen, it needs to have a strong underlying trend, right? It needs to, for example, a hidden bullish needs to happen in an uptrend. So if the market is really up there, then yeah, we would classify that. And for a hidden bearish, a market needs to be in a downtrend. Obviously, we're not looking at any trend right now for gold, especially gold right now, as I said, you know, it kind of trapped between 2000 and 1950. If you take a look at the other time frame, it's just stuck within the Ichimoku cloud as well. So we're not looking at any trend. So I would actually ignore whatever you might think as a hidden bullish. It's not a hidden bullish divergence. Is there a symmetrical triangle on gold on the 4-hour time frame? It should reflect the same one that I just drew on the daily time frame. It's actually in a pennant. Right, the symmetrical triangle that we are looking at is noticeable on the daily time frame, and it should be noticeable on the 4-hourly time frame as well. There we go. Right, so we're looking at this, and as I said, you know, I would really ignore this because again, if it breaks the triangle, what's gonna happen? You're gonna it's bound to find resistance at 2000. If it breaks to the downside, it's bound to find support at 1950. So if you look at it from the 4-hourly time frame, I would actually just wait for a break below 1950, and I much prefer to go for a short. Right now, orders are being lined up at about 1950. I don't think there's actually a lot of orders at 2000. So a break below 1950 is actually going to cause a significant drop on gold. But yeah. There is a triangle. There is a symmetrical triangle, but I would ignore the symmetrical triangle, just considering where that size of that triangle is and also where we are right now. We are between two key levels, 1950 and 2000. All right, cool. Okay, let's go through a few questions from the top, just in case. All right, so please help me with the pound USD. Yes, we will take a look at the pound USD on the hourly time frame. What about the pound and the euro on the hourly time frame? Does that classify as the divergence? I don't classify this as a class A divergence as of yet. We do see that. We do see a little bit of that cycle coming off. In terms of divergences, can we classify this as a class A divergence? It might be classified as a class A bearish divergence, but on a note, again, the momentum doesn't measure how far price will drop down. So what we are looking at is, if we classify this as a class A bearish divergence, we're not really looking at a trend reversal at this point in time. We might actually see a little bit of a correction to the downside. So the Euro USD is actually in a very unique situation, and you know, we were looking at this on Monday. We were really just targeting about 1.08. It actually went a little bit higher. We've broken through 1.0850, and this is where it's slightly unique for the Euro USD. Do keep in mind, on the hourly time frame, it manages to break above 1.0850. If you take a look at the Tenkan and the Kijun Sen and where price is bouncing off, it's actually bouncing off those support. So short-term wise, there's a little bit of a temporary support building up for the Euro USD. Do I expect another drop towards 1.08? At this point in time, I don't expect that drop towards 1.08. I think what we're looking at is that we have support that actually moved up a little bit higher. I'm not going to draw this for long, but just to give you an illustration on what we're looking at, we're actually looking at 1.0825. So what's likely going to happen at 1.0825 is that if price manages to pull back to 1.0825, you're likely going to see buyers buying on the dip for the Euro USD, just because this one here has broken through 1.0850. This is interesting. And also in terms of the rejection intraday wise, it does get rejected at 1.0870. Now, I will shift your attention a little bit on the Euro USD and the Pound USD. There's a reason for this one here. If you guys are following me on both Telegram and Discord, I've posted the trading that I've done for the past 24 hours, right? I actually cut my short position on the Euro USD when it pulled back down to about 1.0825 just now, right? And let me clarify a few things. Why I don't actually find the dollar pairs interesting at this point in time. So let me give you an illustration on the pivot level. If you take a look at the daily pivot level where it get rejected, right now it is at resistance 1. So it's actually pretty fair to say in terms of today's range for the Euro USD, the Euro USD has pretty much used up its range for the day. Now, take a look at the movement here on the Euro USD. And the range basically bounces off from pivot to about resistance 1. How far up can it go? Can it go to 1.09? As I said, on the daily time frame, the key level to watch out for is 1.0850 to 1.09. There's a higher probability for the Euro USD to actually attempt to test 1.09. So with the Euro USD, I don't want to go short the Euro USD. No matter how tempting it is, thinking about, oh yeah, you know what? It got rejected at resistance 1. I think we would go short. If we take a look at the risk to reward ratio on going short the Euro USD, just asking it to return towards pivot level, right? It's not going to give you a 1-to-1 risk reward ratio. Even if you aim for 1.0825, it's barely going to give you about 1-to-1 risk reward ratio. And the range is small, right? If you want to attempt to go short on this one, feel free, but it is going to go against the trend, and I don't like that. It's just a 25 pips move to the downside, and we might actually see buyers coming in at 1.0825, buying it back at around pivot level. Tomorrow, it might actually take this up higher towards 1.09. So the strategy for the Euro USD, I've kind of I don't really want to look for a short on the Euro USD anymore. We have transitioned back above the Ichimoku cloud. We have broken through above 1.08. We have broken through above 1.0850. Right now, we're looking at a potential return towards 1.0825. We might actually see more buying action at 1.0825. So what's key for today? The range has shifted, right? If we look at what it was yesterday, between 1.08 to 1.0850, we were looking at a little bit of a critical level. It wasn't able to go bypass 1.0850. It did went past 1.0850. So the situation has changed. I'm not really looking at the range between 1.0850 to 1.08. I'm currently looking at 1.0850 to 1.09. So this is going to be where the Euro USD is likely going to be traded. What we are going to be looking at for the Euro USD is the potential for this one to move back, at least back towards pivot, and then progress higher tomorrow, not today. In terms of the range today, it has pretty much, if we take a look at the movement today, intraday wise, it is at about 53. So on a normal scale, the Euro USD's range, it is about there. So if it does want to break higher, then there's a higher probability. For this one to progress higher. Now, what are we looking at here for the Euro USD? Again, I don't want to go short the Euro USD, but I want to see if support is going to build up at about 1.0825. If support builds up at 1.0825, then yes, I'm actually going to be looking for a potential buy around 1.0825, and I will have my stop loss still below 1.08. All right, so I'm going to be looking at any move towards the pivot level, back towards the pivot level. I don't expect any run today towards 1.09, but I might expect that run to happen tomorrow if price bounces off 1.0825 or it doesn't close below 1.08 today. All right. Ideally, we want to see price stabilize around 1.0825. At least it'll bounce off the Ichimoku cloud. It doesn't go inside the Ichimoku cloud. If price goes below 1.0825, then it's actually going to go inside the Ichimoku cloud. Then it's not going to be interesting, at least to be traded intraday wise. Okay, so we're looking at this scenario right now for the Euro USD. Again, really want to focus between 1.0850 to 1.09 for the Euro USD. Okay, so we're looking for that pullback to happen. If you have a long position on the Euro USD, what should you do with that position? Depending on where it is, your stop losses should be at about 1.08 right now, because we don't really want to see the Euro USD pull back below 1.08 if you have a long position on the Euro USD. Okay. All right. Next up, it's Pound USD. Again, Pound USD, if we take a look at what's the current situation, again, we're looking at that pullback. Now, this pullback here is going to be a little bit different. We are going to see that pullback towards 1.23. Doesn't matter where it is. If price manages to traverse back down below 1.2320, then yeah, we might see that pullback towards 1.23. And let's, be a little bit more realistic. You might look at it as if like, oh yeah, those candles are huge, right? But for the Pound USD today, it only moved about 56 pips. So it is actually within a very tight range. And in terms of where the pivot is to support level, it is just going to be about 27 pips. So what I'm saying is, let this one drop to 1.23. If buyers starts coming in at 1.23, that would be in line with what we're looking at on the daily time frame. Right, we have broken through above 1.23. We want to see 1.23 tested as support. In terms of daily momentum, it is still above 80. So this one can still drives it up a little bit higher towards 1.2450, 1.24. So Pound USD, leave this one alone. Don't attempt to go short on this one. It's not really worth it if you try to go short for this one, unless you're really scalping the market, right? And you want to go for that 1.23 level. But you guys know me, I don't do this. Realistically, you're risking double for a 20 pips in the market, so not really worth it. But I mean, yeah, I don't know, it depends. If you're scalping the market, if you're trading on a 5-minute time frame, then yeah, you might want to consider that. Even, is it really worth it? It's not really worth it, I'll be honest with you. Okay, so this is crazy. I would wait for this one to move closer to 1.23, and any bounces off 1.23, that's where I want to be looking for buying opportunities on the Pound USD. In terms of stop losses, you want to have it about 1.2275. Target level, you want to go for a little bit higher on this one, right? You can go for that 1.24 if you want to. That's going to give you a great risk-reward ratio on the Pound USD. But on one condition, it manages to hold off, from 1.23. So your entry will not actually be at 1.23. Your entry might actually be a little bit higher, maybe about 1.2325, because we need to see price bounce off the Ichimoku cloud and then move away from the Ichimoku cloud back up. So you're going to get your entry about 1.2325-ish. You're going to be looking at about 50 pips of risk. You're potentially going to be looking at between 76 pips or potentially about 120 pips if you're targeting 1.2450 on a Pound USD. Okay. All right. We haven't talked about yen crosses. All right, on sterling yen, let's talk yen crosses, because I really want to talk about yen crosses, especially we already talked about the dollar Japanese yen and my view on the dollar Japanese yen, but I really want to show you what with the euro yen as well. The euro yen just broke about 143, and this is currently progressing higher, right? With this one going up above 143, what it does a few fantastic things here. It breaks through a significant level, and if we take a look at the resistance in terms of the whole Fibonacci here, that 143 level is actually the 61.8%. So we're actually traversing higher, and if we take a look at the stochastics, it's barely at 50. So there's a lot of room for this one to go, and if this one goes higher, right, if the dollar Japanese yen gains, the euro yen is likely going to gain as well. Sterling yen is also going to gain. And with what's going on with Japan, with the new stimulus package that they just released, spending 2.2 trillion on that stimulus package in Japan, that's going to send the yen down a little bit. At least we're going to use that momentum on what we have right now. Okay, so euro yen, the potential for euro yen is actually pretty huge, right? Take a look at the movement towards 78.6%. That's going to be about 144. So if you have a long position on the euro yen, I think I mentioned this just now on the Telegram. You scale out on the euro yen, scale out on the sterling yen, right? You still have your positions left over for sterling yen. sorry, euro yen. Euro yen, if this one breaks that 144 level, then progressively you're going to be realistically you are looking at about 146, 147 on the euro yen. The potential for this one is actually might actually be looking at a potential return to about there, which is about 148 on the euro yen. This is huge. Now, if you right now, if you go long right now, your stop losses, it doesn't have to be all the way at 138.80, 139. You can actually have a smaller stop losses, maybe about 141, right? In terms of potential target level, this is for a swing trade. You could potentially be looking at a return towards 148. But again, this is not going to be for everyone. As I mentioned this week, throughout the week, the yen crosses is not going to be for everyone, because your initial stop loss for the yen crosses, you're looking at about 100 pips, right? So I'll go in on the hourly later on, but this is on the euro yen. This is on the sterling yen. Again, we just surpassed 61.8%. We just surpassed 163. The potential for this one here is actually for a return towards 127.2, and 127.2 is roughly about 168. That's where the previous resistance was for the sterling yen. But again, if we take a look at the much bigger picture here, again, you don't need your stop loss all the way down at 158. You can have your stop loss slightly lower at maybe about 160 for your stop loss. Your target levels is going to be about 168. The risk reward ratio is 124. This is nuts. But again, it's not going to be for everyone. The risk it's up there. Risk reward ratio, it's about 1.5, right? It's not going to be for everyone. Your initial risk is going to be huge as well, but this is more for swing trades. What about the hourly time frame? Can you get in on the euro yen on the hourly time frame? This one here, we have surpassed R3, right? So for the movement on the euro yen for today, do not go long the euro yen, no matter what. No matter how tempting it is, do not go long. If you have a long position, and I know half of you guys watching here have that long position on the euro yen and the sterling yen, and probably you still have half of that position running. Hold on to that position, move your stop loss to break even, or if you want to, you can move your stop losses to about 141.50. It should be enough. We're not really expecting a move back towards 141.50. Any correction right now is going to be limited at about 142.50. Right, we have surpassed R3 on the pivot level, so this is already beyond a normal range for it's already beyond the expected range. Tomorrow, the pivot level and the resistance level is going to get wider because of the movement today. But really, we're looking at a potential return for a move towards 145. Ignore the stochastics, because the stochastics will not mean anything to you at this point in time. Any pullback on the stochastics, it's irrelevant at this point in time. Really want to focus on a few things. If you want to wait for a pullback on this one, you want to wait for that pullback at about 142.50. Let me just hide the pivots. Okay, so either price pullback to 143, bounces back up, or 142.25 ish. Right? If it does pull back, then yeah, it could do this, or it could do this. So you got a couple of scenarios, but ultimately we are eyeing for 145 on the euro Japanese yen. So you want to focus on your trades rather than looking at dollar. I would actually focus more on the yen crosses. All right, if we go on any bounces of 143, 142.50, in terms of stop losses, it's pretty reasonable, right? If it bounces off 143, have your stop loss at 142.25. If it bounces off 142.25, have your stop loss at about 141.50. You're still looking at about 50 to 75 pips of potential stop losses on the euro Japanese yen. But this is pretty much done. This was a trade that was done pretty much on yesterday. It's pretty much run its course because we're only targeting 143. 143 net us 183 pips for this week. So you guys trading, I know half of you guys are following these trades, and you guys should be pretty happy today. I think it's a happy occasion, even with this one pushing up a little bit higher on the euro yen. It pushes up about 68 pips above the target level. It doesn't matter. I think we all get out with a good profit on the Euro Japanese yen. And that's going to be the similar situation with the sterling yen as well. The overall condition for the sterling yen, we're still eyeing for that 161.8%, pretty much at about 164. Right now, price is nearly there, right? So I'm not really going to go after this. I'm not really chasing after sterling yen. So if you want to trade the yen crosses, the tone for the yen crosses is that we are likely going to see a weaker yen going forward, at least in the next few days. And the tone for this one here is that we're likely going to see the dollar yen, the euro yen, sterling yen moving up a little bit higher. We also the Aussie Japanese yen as well, but we really don't want to focus much on the Aussie yen because we're not really looking at a lot of price movement on the Aussie USD itself. Okay, so sterling yen again. I'm not looking at any signs of this being overbought as of yet. So can this one progress towards 164? Yes, it might actually continue to move towards 164. But if think about it, if you want to go long on this one, even if you have your stop loss at 162, it's not really worth the risk to reward ratio. You're going to be risking a lot more. So trade smart on the yen crosses. I know this is frustrating, because to a lot of you guys might have missed out on the yen crosses if you're not paying attention to the yen crosses this week. But the opportunity to go long, it's still there. Just don't go short yen crosses at this point in time. Do not attempt to go short euro yen. Do not attempt to go short sterling yen. It's going to be very, very risky if you attempt to counter the current trend on the euro yen and the sterling yen. I would wait for a pullback, be a little bit patient, wait for a pullback to happen. We're looking at 162, we're looking at 161.50. Ideally, about 162, it's kind of the limit in terms of how far back a pull down I'm anticipating for the sterling yen. So really want to wait for that pullback, But this one, I don't know where this is going to end. It might actually go all the way up to 164. If it goes all the way 164, then we want to wait for that pullback at about 163. Then yes, we are going to go a little bit higher in terms of how far it's going to go. So it's not a missed opportunity, and don't beat yourself for closing a position that you have running from yesterday, because we are running a little bit of a risk on the sterling yen and the euro yen. Okay, this is currently beyond normal range, right? This is surpassing the R3 pivot, which is at 163. So don't beat yourself up if you close up your positions from yesterday's trade on this one. This has already run 270 pips one day, right, within 24 hours. This is nuts. Okay, so again, don't go chasing after the sterling yen or the euro yen. Let this one run its course. Wait for a pullback. Do not attempt to go short euro yen. Do not attempt to go short sterling yen. Okay, if you do that, you can if you want to. Obviously, it's your choice, right? I wouldn't do it because you're running a huge risk right now. The trend is so strong. The short-term trend is so strong, so much so that the RSI barely even goes to 40. So the RSI is like super strong right now at this point in time. Very, very strong. Okay, so this is an indication of how strong the current trend is on the sterling yen. And in terms of how far it has run today, it's run 270 pips within 24 hours. That's huge, and it's not worth chasing after. Okay, wait for a pullback. You're not going to miss it because we are aiming for a lot more on this one here. 168, 168, potentially 170 on the sterling yen. A lot of movement left there for sterling yen. So you are going to get your opportunity to jump back in on the euro yen and the sterling yen train. So I'm not too worried on that. Yes, Dinesh, I just went through sterling yen. All right. Sterling yen, if I draw a trend line on the daily time frame starting from October 31st, now price really breaks the trend line, right? October 31st. October 31st. You're looking at this. That's, yeah. Let me just extend. Yep, we broke that. Yes, a very good observation. Yeah, we broke that. What can drive the market? Why is it too slow and almost no volatility? What do you mean there's no volatility? I don't understand that question because we just saw a huge volatility in the market. Yen crosses are moving like crazy. It was what? It's 274 pips in one day. That's not volatility. Maybe you're looking at wrong pairs. I don't know, but there is volatility in the market. You just need to know where you look for, what you want to be looking at for. Can you give a quick summary on the dollar Japanese yen intraday wise? Intraday wise, I haven't. So let's talk about dollar Japanese yen intraday wise. The dollar Japanese yen, let me just recap you guys on this one here. Just waiting for that 132.50 to break. Dollar Japanese yen intraday wise, we're still running on this trade, right? We're still aiming for that 134.50. Again, we already passed. Wow, this is quick. We just surpassed 132.50. So 132.50 has gone past. Next up for this one is 133. So if you're not in a dollar Japanese yen trade, do not go in on the dollar Japanese yen trade and do not attempt to go short on the dollar Japanese yen. If you see a rejection at 133, then wait for a little bit of a pullback to happen. I really want to see price close above 132.50. So I think we are likely going to maintain that position above 132.50 for today. So, do I expect a pullback to happen today? Probably not. Maybe tomorrow morning, yes. But for today, don't go chasing the yen crosses right now. It's not really worth it. If you have that position, then yes, keep that position running. Go for 134, 134.50. If you want to play it safe, you can scale out at 133.50. You should be scaling out right now at 132.50 because we just hit 132.50. You should be scaling out right now. You could scale out again 133 or 134. Ultimately, our ultimate target is going to be at about 134.50. Okay, anything beyond 134.50, we're looking at a potential return towards 137, but that's still really far off. Okay. So, dollar Japanese yen intraday wise, do not attempt to go short. Dollar Japanese yen, if you're thinking, okay, should I go long? If you really want to go long on the dollar Japanese yen, you have a few options, right? I wouldn't have my stop loss at 131.50. You're not giving the market enough room. And this is 110 pips. You're not giving it enough room by having that stop loss over there. If you want to have your stop loss, you want to have it below 130.50, and that's going to put you at about 214 in terms of potential risk. Now, if take that up to about 134.50, your risk reward ratio is barely going to be 1-to-1. So is this ideal if you just jump in like that? No. I would wait for a pullback. I would wait for a little bit more of a confirmation. I would wait for a little bit of a reset in terms of the momentum. I think for this one here, again, as per Euro yen, sterling yen, we are really approaching the daily limits on the pivots. We are looking at R3 on the pivots, right? Anything that moves to R3 at a pivot, it's really pushing it, right? It's really stressing it out. Can it break R3 and go even higher? Yes, it could happen, but that's not going to be the norm. Typically, we use R3 to limit extra volatility in the market. So Rinjani, if you're saying there's no volatility in the market, I don't know what you're looking at, but we're looking at a severe, like extreme volatility in the market. And I know you follow me on Telegram and you were active in the community channel. You know what our plan is for the Euro yen, sterling yen, and the dollar yen. So I don't know why you're asking the question why there's no volatility in the market. All right. What could be the best level to scaling again on the dollar Japanese yen pullback? I really want this one to maintain a position above 132.50 today. So what we're looking at in terms of pullback, I think we would be looking at about 131.50 as a potential pullback. I'm just not expecting it today, right? I do expect price to be stable, at least move closer towards 133. If it moves closer to 133 and find a little bit of resistance, then yes, we could look for that pullback to happen. But the ideal pullback for this one, it's going to be either 132 or 131.50 on the Dow Japanese yen. Yeah, look, the yen crosses is not going to be for everyone. In terms of volatility, it's crazy volatile, right? The minimum stop losses on this one is huge. So this is not going to be everyone's cup of tea. But if you're asking what's really moving in the market, then I would say you want to focus a lot more on the yen crosses rather than the US dollar. You're not looking at a lot of action on the US dollar. It's kind of constrained within a 50 pip, 40 pip range. But the yen crosses, you're looking at 3 times, 4 times, 5 times the range. It's huge. All right. Okay. Last one. What's my view on Apple stock? I'm an Apple investor. Just a disclaimer. So my view on this one here is that I'm still holding on long, and that's just my life savings. It's not really my life savings. It's really more for the long term. But Apple stocks on this one here, do I expect a little bit of a pullback to happen on Apple stocks? We are at about 160. So yeah, as long as it doesn't surpass 160, I do expect a little bit of a pullback. What's more attractive on a buyback on this one here is about 150. So do I expect a little bit of a drop? Yes. About $10 drop on the Apple stock. I think that would be great. I think there's going to be a lot more buyers coming in about 150. All right, cool. Well, time flies. I think I answered everything. So yeah, the one question that I find really weird, it's really what drives the market? Why is it so slow and there's no volatility? There's huge volatility right now in the market. So yeah. Dollar Japanese yen entered on what? 130.78. Can the stop loss be adjusted? Yeah, you should be adjusting your stop losses on the Dow Japanese yen. You could have your stop loss at about, you entered about 130.78. We did talk about gold, India Patriot, Vinod Kumar. We talk about gold, so you can review that later after this. You entered 130.78. Can the stop loss be adjusted? Yes, you can move your stop loss to about 130.50, or you can move it to break even if you want to, or if you want to lock in some profit, you can have it at 131.50. But look, I do expect a little bit of a pullback potentially towards 131.50, so probably don't place it there. Okay. All right, guys, that's a wrap for the month of March. That's a wrap for this session. As per usual, good luck with your trades, and I'll see you real soon.